This week's number, 322,000. That's how many hours e-commerce company Shopify is attempting to save by rolling out a calendar on employee calendars that shows how much each meeting costs the company. I have a corner office with a view. I'm a bus driver. Welcome to Prof G Markets. Ed, what's going on today?
We've got something new for our listeners this week, Scott. We spend a lot of our time on this show discussing public companies, macro conditions, and other big ticket stories. But we wanted to gain more insight into early stage business and investment. So the team's been working on a pilot of a new concept called first-time founders. I've spent the last couple months speaking with entrepreneurs about their businesses and what it's like to found a company. And we've got the first of those interviews ready today with Eli Wachs, the founder of Footprint, which is a company that helps people and companies store and manage personal data online. We're going to listen to this interview and then we'll come back for your reaction and perhaps you'll give us some advice for the founder. You have started 9 businesses after all, so we're hoping to tap into that expertise. Welcome to First Time Founders. Last year, we wrote a post on No Mercy, No Malice about identity, specifically online identity. Scott pointed out that the internet is one of the few places on Earth where you can operate with complete anonymity. There are few social media platforms that require you to verify your identity, and on many platforms you can simply pretend to be someone else. This is largely why bots and hate speech are such an issue online. Now, Scott's thesis was that this is a problem, but also a solvable problem. He believes we could fix the internet by requiring identity verification online. Now, that's a statement many considered controversial, but also one that 80% of the US population supports. Regardless, if an internet company decided they did want to verify their customers, the question is, how would they do it? Well, I'm pleased to say today's guest is Eli Wachs, whose company is answering exactly that question. Eli is the founder and CEO of Footprint, a digital identity and security tool that allows companies to onboard and verify their customers with just one click. Eli, thanks for coming on.
Ed, thanks for having me. I was worried if I got dinner with you enough times, you'd be scared to get to know me. But honored and thrilled you had me on.
Exactly. Yeah, absolutely. The dinner was sealed the deal for me.
That's great.
So let's just start with this. What does Footprint do?
Yeah. So Footprint helps companies, we say, onboard users and offload the cost and risk of storing that data. What that also means is we're offloading them storing a lot of your personal information. So that's what we do in a nutshell. For people, we're the last identity form they ever fill out. As you said, it'd be really tedious and burdensome if every time you went to create an account, you had to fill along information, filling your information, given that presumably it shouldn't change. And we feel the same way. And that's what we've tried to build over here at Footprint.
How did you come up with this idea? What was the inspiration?
I became really interested in privacy back in 2016, around the 2016 election, Cambridge Analytica scandal. There was a lot of talk around what should privacy look like online. And I actually disagreed with a lot of the sentiment. There's a lot around how do we legislate away and regulate kind of data. And kind of, I think there are a lot of people who wanted the world to look like DuckDuckGo. And look, it's a great platform, but to me, that is very powerful. There's a reason why it exists. And I actually became more upset with maybe what Google didn't do with my data than what they did do with it. Google is probably one of the best predictors in the world if we'll get things like Parkinson's. They know it from your reCAPTCHA tests or your finger tremors and your type rate over time. And around that time, I had a family member get sick, and luckily caught it early. I became very obsessed with this idea of figuring out how do we put people in control of their data. And that's really what set me on this path to Footprint.
You mentioned DuckDuckGo. I'm not sure everyone knows what that. Can you explain what DuckDuckGo is?
Yeah, it's both a children's song, I believe, and then for this purpose, I'm bad with analogies, so maybe it's not. I think it's something like Ring Around the Rosie, and then it's a search engine which doesn't have it doesn't collect any data. There are no targeted advertisements.
Mm-hmm. Okay, so you talk a lot about this idea of KYC. That's a big mission statement for the company, which stands for Know Your Customer. Can you give us like the general picture on what KYC is and why it matters on the internet?
Yeah. KYC, it strangely kind of stems from the Patriot Act in a way. So it comes from almost a national defense bill, or at least the definition that we use today of it. KYC, it stands for Know Your Customer. Essentially, it's this idea where if you are a fintech, or if you're a bank, and if you're a fintech, you're probably using a bank. The US wants to make sure that people who have access to banking rails and the ability to move money are quote unquote good actors. They're people
Yeah.
who can be trusted. They're people who aren't going to be using it to launder money. They're not on any sanctions lists. They're not on any kind of screens. And that's how it started. And I think kind of a level down was it was seen as a way to kind of, do we trust the people who are letting to use our platform?
Hmm.
I think we've seen in the past maybe 10 to 15 years, as there have been companies that have really stepped up to solve KYC, we saw them really just be a checkbox.
Yeah.
They confirm that the identity entered matches identity in a database. But that's not really solving the real issue. Whether it's what you spoke about at the intro around, are we trusting the people who are on Twitter are real people? And it's not really solving the problem of, are we trusting that my Uber driver
Right.
is a trustworthy person? All we've really confirmed is that the information they use to sign up matches information in the database,
Yeah.
and that's kind of what we saw is really wrong. Kind of, to me, it's strange that companies that were verifying people also weren't fraud detection companies. That seems disjointed to me. And that's what it's done, and it's led to what we say is we're looking for like bad actors, which is inherent. Like, know your customer. It's like a Sherlock Holmes mystery to find the bad people. The
Yeah.
problem is that it's never ending. There's an infinite amount of fake identities to be made. Conversely, there's a finite amount of real people. Two of us are talking right now. We know how many people live in New York. We know how many people live in this country. And with School of Footprint is we're trying to make this closed loop ecosystem so that we know the moment a second ed appears, one of you two has to be lying because only one of you can have that identity.
Yeah.
And once you've established that source of truth, then you can do other things without needing to fully reprove that again.
Yeah. Yeah. I mean, when you look at the way that the entire world works, it's like your identity is crucial for literally everything you do, right? It's like if you want to buy a car, if you want to drive a car, you got to register all of your information and they put it on a card and then you got to show them the card. If you want to get a drink, you have to prove that you're a certain age. If you want to buy a house, if you want to open a bank account, they have to do a credit check. They have to learn about who you are. Why is it that when the internet was built, that we decided that we don't care about that so much? Why isn't that why is that such a crucial part of the rest of society? And then for whatever reason on the internet, we don't like to think about identity. We don't want people to have to prove who they are.
It's a really good question, and I would even extend it a step further. In the real world, you kind of describe more as the happy scenario where you're trying to rent a car for the summer, or you're trying to buy a drink. There's also the scenario where I steal a car, and presumably, if I did that, I wouldn't be allowed. It'd be tougher for me to step within 100 feet of a Ford dealership. But the internet said there are really no repercussions. I say fraud's close to free, or fraud's
Right.
about $50. That's how much it costs to get like a pack of fake identity trading cards
Yeah.
on the dark web.
Yeah.
And that's the other thing. I'd like to say that everybody's very naive and they just didn't think about this, and the Footprint team came to save the day. I don't think that's true. I think
Hmm.
people have thought about this. I think that the technology hasn't really been there to be able to accommodate it, and that Footprint, we're really known for bringing one-click KYC, where
Yeah.
the ability to verify yourself once, and then going forward, you just use Face ID on your phone. That's only possible, though, if you have secure auth. And pretty much the standards we tap into, it's FIDO2, which comes from WebAuthn, without getting too nerdy, is kind of this alliance of Google, Apple, even Microsoft. And they finally agreed to this common standard, essentially of Q4 of last year. So it's not even that long that we've had it. What's
Mm.
interesting is the underlying protocol of WebAuthn. Google implemented it back in 2008. And at the time, Google was struggling with phishing attacks. And since they implemented it, they had no internal phishing attacks.
Mm.
And why that's important is that, when people used to ask me about maybe like, why aren't you doing Footprint on blockchain? To me, it's
Yeah.
like, well, I don't want to accidentally send my identity to the wrong person. And then it doesn't really do me good that I can see who I sent it to in the ether because they have my identity. I think you actually do need a strong centralized arbiter here,
Right.
but you need that strong reauth. And that's
Right.
kind of what passkeys have unlocked for us in the past kind of 7 months. And we do that in conjunction with some other things that enable us to kind of have that fidelity. Because like you
Yeah.
said, it's strange that we have to keep doing something that the internet's supposed to be about undoing monotonous tasks that we normally have to do physically. But identity seems to be the opposite of that. Like there are so many things we have to prove our identity for online that we don't even think about in person.
Yeah. So a few things. One, you talked about blockchain, and it feels like the whole point of blockchain, or one of the central points of blockchain, was to remove the need for KYC, was to remove the need for basically having to trust someone, like you're describing in a transaction. Oh, you won't need to trust them because it's verified and it's on the blockchain. Now we've sort of seen this play out. That didn't really work. There's probably no industry more fraudulent than the crypto industry. But it still raises this question of, it's a shame and it's a pain and it's annoying that when you transact with someone on the internet, you have to somehow trust them. And it's easier when we transact in real life where, you're face to face with someone, you look at the store owner, you pay them the cash, or in any other transaction where there's maybe in banking where you feel like maybe there's some institutional credibility, you believe that the transaction is real. But you're basically saying to customers, at least, you can trust us. So my question would be, why should customers trust you?
It's a great question. So when you say customers, it could mean two people.
Mm-hmm.
It can mean like the businesses that we sell to,
Yep.
and it can mean their end customers.
Yep.
I think that second question is one that we will never be able to fully be happy with, and that it's something we have to prove every day.
Yep.
I say the company's built on trust. I publish my very long philosophical investor updates that nobody asked for. But I say, if you're going to trust me with your SSN, you deserve to get to know my rambling thoughts of love
Yep.
and life, and the shadow
Yep.
self. You likely won't like what you find, but I think you deserve that chance. We publish our pricing. We publish pretty in-depth articles about our technology. I think it's something that we try to operate with transparency there. And,
Yeah.
even you can log in and you can view, it's not going to be that interesting, but you can see which company accessed your data for what reason. We actually find that companies like that more as like they know everything they do will be recorded to an audit log, and they like that both for accountability and for compliance reasons. So why do companies trust us? I think it's twofold. One is that we do things which become much more valuable than just a check mark. We work with some companies where they maybe are feel like locked into like a payment processor, and
Mm-hmm.
they'll use Footprint. We don't do a KYC. We collect information. We give them a flow. They have more options of where they end up going.
Mm-hmm.
I think though, like the next step I'd go is, and this may be a fun line for a podcast, but I say, and I'd like to qualify this by saying this is an anti-NRA line. But I say that to steal a line that the NRA uses improperly, which I'm about to use in context, businesses and bank accounts don't commit fraud. People commit fraud.
Yep.
And
Nice.
that's not a
I
love
love
letter
it.
with Javier. I don't like them. We need to ban them. But what I think is important is that it's kind of crazy that, if you go and speak to Ramp or Cap Chase about the fraud, it's the vast majority is like fake three-person businesses, which means it's somebody who created a fake three-person business with the insurance and fraud.
Right.
There are fascinating stories about how hotels and rental car companies, like oftentimes will like do multi-month moratoriums of Chime cards
Mm.
because people will just create a Chime account. They'll
Yeah.
rent the car with the deposit and they'll pull the money in
Just throw it
advance.
away. Yeah.
ACH fraud is a fascinatingly kind of easy thing to do because there's no repercussion. Your Chime bank account gets shut down. Guess what? We're in the world of fintech. You can create 20 more accounts the next day.
Yeah.
What's more about Footprint is we link those accounts back to the identity,
Right.
meaning that if your bank account commits fraud, that will be associated with your identity. And we're not trying to blacklist you from the internet. That will be a note. There are always perfectly reasonable explanations sometimes.
Yeah.
And I think it's how we think about building trust with companies. And I think both have to happen, both with their customers and with our customers.
Yeah. Who are your clients? Like what kind of company wants to use Footprint?
Yes, I mean, companies that we've spoken about today. You spoke about renting a car. We work with
Yeah.
a company that helps you lease cars.
Yeah.
We work with companies that are investment companies. whether you're looking for real estate, whether you're looking for stocks, we all the way through to marketplaces, which you may not even think about. They're not, even though they're facilitating payments, they're more so verifying people to establish trust of the
Mm-hmm.
people inside their marketplace. Because, as you said, we're transacting with people, and now we're doing things like getting in their car, staying in their home, and you probably want to, make sure that there was a bit of a check done.
Right.
You're going to be in for a surprise if you end up in my apartment. You're going to be sad that I wasn't vetted, and that's not just because of the construction going on above. Uh, but and that's who we're. And what's interesting is we scale up and scale down, and
Yeah.
that is a very light sentence. But let me maybe add something to it.
Mm-hmm.
What Scale Up Footprint is, your footprint grows. So if you sign up for a Footprint to say, hey, get a credit card, you probably entered your name, your date of birth, your address, your social security number. Cool. Let's say you then go to rent a car. You're going to need to spend a driver's license. When you go to do that, we're going to bypass collecting name, date of birth, address, social. We're going to go
Mm-hmm.
right to driver's license, and you're going to
Yeah.
submit that.
Yeah.
Then let's say you're going to trade stocks. You need to answer your income, your risk appetite. You're going to answer just those questions. You don't have to answer any of those things ever again. Now,
Yeah.
let's say you then go and create just something on a marketplace where they actually don't really care about the other things. They just need access to your name, your email, your date of birth.
Right.
We can do that. You'll only grant access to those three things, but it's with that fidelity badge that Footprints verified the rest.
Yeah.
So that marketplace, that social media company, they don't need to know that. They don't have access to it, but we've already linked that to a real person.
Yeah.
And what's cool about Footprint is our technology. We know how many identities are on your device.
Mm-hmm.
So if you try to sign up for a second identity, that's a flag to us.
Mm-hmm.
And that's how we think about it.
Yeah. And how do you make money doing that? Who's paying you?
So companies pay us.
Yeah.
They if you if you're onboarding someone, you need to do KYC. So we get
Yeah.
paid each time you verify someone,
Okay.
and then we get paid for storing the data.
Okay.
We're a security company. We offload that storage. We like to think that eventually we're moving KYC from part of your customer acquisition to a
Right.
very small tax of the LTV of the consumer. That we boost
Right.
conversion a lot, both with trust, by removing friction, by increasing security.
Yeah. And what are your costs like? What is the operation side of this? How does that work?
I think as a startup, the vast majority is R&D
Yeah.
and headcount. Uh, we have fund legal bills just from kind of what we do is we operate in a highly regulated space.
Yeah.
I think that and then when you verify someone, you're paying kind of the database that verified it.
Right.
That's kind of like the highest level breakdown.
Right. And where in the business trajectory would you say you are right now? Like, how many employees do you have? How much do you think this thing can grow? Where do you hope to achieve? Where do you hope to land in the next few years or so?
We're a 15-person company today.
Mm-hmm.
We're about 16 months old. We've now been live for about 4.5 months. We're growing pretty quickly, double-digit customers, revenue's ramping up a good amount.
Mm-hmm.
We now have our line of sight to our first million plus portable identities.
Mm-hmm.
And to me, that's always been a extremely arbitrary number I picked as let's see if we can get here. I think next is the goal of to me, if we're having this chat in double the company history, let's say
Yeah.
we're in another 18 months.
Yeah.
I want to have line of sight to 10 million portable identities, another arbitrary number I'm plucking out of the sky.
Mm-hmm. There we go.
To me, I've said, obviously a lot of the appeal to Footprint is this network effect.
Yeah.
And I think people have said from the beginning, how do you think about a cold start problem? And my honest answer has been, I don't go to bed agonizing about a cold start problem. I go to bed thinking about, how do we build the best onboarding experience, and how do we build the best security for data operability?
Yeah.
And that's what our goal is. We want to be like a type form for onboarding, and we want to be like a segment for your data,
Yeah.
and do both of those best in class.
Yeah.
And if we can do that, that's when I get very excited about, being an identity layer to the internet for both businesses, what it means for them to be able to really trust the people they're letting in, be an onboarding platform for all of fintechs, and collect all of that in just 5 lines of code.
Mm-hmm.
And then for people, I think that there's a lot of long-term stuff that I get really excited about, from kind of putting people in control of their identity. I think in the short term, we think Footprint kind of at scale becomes like this built-in LifeLock as a service, and
Hmm.
that you know we know when somebody is trying to take your identity. I jokingly call it the duel. I've said that we'll send everybody a jousting uniform and I'll get to prove that I'm the real Eli. But it's there's billions of identity theft a year. It often happens to the elderly. It often happens to more vulnerable. That number should start going down. Like I really view it as a big failure that there are all of these big companies in the space that have been operating for 10 years and their revenue may be going up, but identity theft is also going up. And
Yeah,
to me,
exactly.
I don't know another industry where their cardinal metric keeps going up and they view what they're doing as successful.
Right.
And I say that I think it's an incentive issue. I think that KYC companies are fraud detection, not fraud prevention companies. Because when they detect fraud, they sell you more products to find
Yep.
more fraud.
Yep.
Footprint, by contrast, because we're doing the security too, we're a data operability platform. We're an onboarding platform. We
Right.
play with different incentives. And I think that's important because that number needs to start going down because at the end of the day, we're serving people. And like it's also to me by building that trust and by being open and transparent, this becomes a much more solvable numbers game. Like
Yep.
by the time we've done 300 million verifications, we should know who's who, not in a big state way, but just in a like who should be allowed to open accounts way.
Yep.
Uh, there's so many companies in our space that have done far more verifications than that, but they don't know that because in a way they're not even incentivized to.
Yeah, exactly. Yeah, one thing that it makes me think about is, I mean, earlier you were mentioning the idea of Face ID on our phones, and there's this big sentiment among people right now, which is, oh, don't give your data over to big tech platforms. You can't trust them. But then at the same time, we are literally using our biometric identity to open up our iPhones every day. And now we're putting our credit card information into our phones and we're uploading our wallet information. We're using our phones as basically a tool to do everything. And the only reason that we can do that is because we have decided to trust Apple with our identity, which is a long way of saying, do you fear that Apple could eat your lunch here, basically? That they're just going to double down on storing everyone's data? And if so, how do you overcome that?
Fantastic question. You'll let me know when I'm cut off from answering. Um, Apple. So I think the first thing that you said is really true, which is cool. Is that we don't Footprint's not collecting a face. Like we're not taking. We are just verifying that the face that unlocked the phone is the face that is supposed to unlock that phone. And that,
Sorry, what are you actually taking in? What
so
data are you collecting?
we're getting a cryptographic signature essentially from Apple that
Yep.
the Face ID worked. It's the face that unlocks it. It's non-jailbroken. It's a non-spoofed IP address. It ran unsigned Apple code. What's
Okay.
nice about that is that we think that's a higher fidelity verification than me taking a selfie, and you're not running afoul of Illinois lawsuits. So like
Hmm.
that's the business perspective. For Apple, if Apple decides they want to do this and really invest, tough day for us at the office.
Yeah. Yeah.
I'm going to be honest about that.
Yeah.
I I Apple are the most brilliant privacy copywriters in the world.
Yeah.
And I mean that complimentary and begrudgingly. I wrote my whole senior thesis in history about like the history of
Oh
Apple
yeah.
and private data.
Oh wow.
And I think what you said is really interesting, which is that if you were to walk up to someone on the street and say, who has more of your data, Facebook or Apple? I think like the common thought is like Facebook. They're the ones who like did the election stuff. Facebook has nothing. They know that I clicked on like one rogue ad.
Yep.
Apple has my
Exactly.
health data, they have my payment, they have credit cards, but we trust them. And it's because they've really invested in that. I mean, Apple, they just used the privacy is iPhone commercial as their legal defense
Yeah.
against Epic, and it worked.
Yeah.
I mean,
Yeah.
it worked.
Yeah.
Apple claimed that they need to charge people a 30% cut because that's privacy, that's iPhone.
Totally.
It's remarkable. Now,
Yeah.
what I'll say is, I in the spirit of transparency, I wrote a whole investor update called "About Apple" last fall,
Oh wow.
and it's my whole argument laying out why they totally could do it, but also why I don't think they will. And I think there are a couple reasons. I think one is that Apple is many things. It is currently not an enterprise security company.
Hmm.
And that's what the other part of this is. You know, it's not just the account creation. It's then, does Apple want to proxy data on behalf of a credit card company
Hmm.
to Fiserv? They may be okay with that.
Hmm.
Does Apple want to proxy information on behalf of a broker dealer to IRS at the end of the year? It's stuff that they haven't done yet.
Hmm.
More so, I think that Apple is really smart about having the option to go into a space and purposely not doing it so they can do the bigger space. I think
100%.
Apple cares a lot more about like Apple banking and like owning that than owning like the onboarding ramp to it.
Yeah.
Like it's similar to like I think Apple cares more about like selling Apple devices to enterprises and owning mobile device management.
Yeah.
And like they like bought a company in the space. Like I think like is like de facto shut so they can claim that they don't own everything that they touch.
Yeah.
And I think then the other thing to keep in mind is Android still has pretty decent market share. And globally, Android has far more market share.
Yeah.
So if you're a company, then even if Apple really goes into this, you're going to need then a vendor for the non-iOS people.
Yeah.
And that's something that, you know, just will need to be solved anyway. And I think that's why Apple doesn't present a full solution.
Yeah.
I think that they're going to become an increasingly important part of it that we're excited for. I think what Apple's doing with mobile driver's licenses is fantastic. It's going to be a huge milestone for the company. It's why like we from the beginning have like really looked forward to and built what's called app clips is we can go in and fetch them.
Yeah.
So I think Apple's going to make the identity industry a lot better. If they decide to crush us, that will not be a fun day in the office. But I think there are
Yeah.
reasons that they're not going to, because the other thing is uh, Apple as masters of PR, they don't want to onboard the wrong person, or
Hmm.
they don't want to block the right person. So
Hmm.
it gets into just waters that I think they prefer to stay out of.
Yeah, exactly. It also feels like, you know, the incentives from the consumer perspective are, do you want to give your data to the company that's trying to sell phones, or do you want to give your data to the company who has a financial incentive to protect your data? And it's sort of like you've found the right incentives there. At least I, from a consumer perspective, would rather be giving my data who's to a company whose incentives are aligned. But company aside, I want to move on to just you as a person and as a founder. And that's sort of what this podcast is ultimately getting at, which is, what is it like to be a founder? And I want people who are considering becoming a founder to sort of understand what type of journey they're embarking on. So let's start with, you mentioned that you came up with the business plan in college, and then 2 years later, you actually started the business. Why did you decide that you wanted to start a company in the first place?
I did not always think I was going to start a company. I tell a very clean narrative of how I started read a book in ninth
Yeah.
grade, and then I cold emailed the author, and I started a company, and then I went to Stanford, and I started a company there, and
Yeah.
the dots are really clean in hindsight. They were not clean in real time. I was just interested in the space, and kind of I remember back my junior year of school, like I got very interested in GDPR, and like I signed up for like a very nerdy like law class about it.
Yeah.
And
Could you
it
just
wasn't,
elaborate, you just explain what GDPR is for the listeners?
yeah, this isn't making me seem fun. But yeah, GDPR, it was passed in 2016, and it's Europe's like data privacy
Yeah,
laws essentially.
exactly.
And it was, if you're mad about cookie consent banners, or if you're happy about them, shout out GDPR. It was an interest, and what's interesting is like GDPR is semi. I think it did some things right. I think it did a lot of things wrong. I then was working in VC, and I saw all of these like what I found like very checkboxy GDPR compliance companies that kind of bothered me, in that like their goal is to make money by locking away data, and then like they weren't solving anything too. Like I didn't think that like if you want to lock away data, like what I started selling a spring called Tech Fights Dobbs after the Dobbs decision in the U.S., and it was to like
Mm,
help women like who like want to sign up for like female health apps not have to like give away their data. Like if you want to lock away that data, great. But if you want to
yeah,
lock away like an SSN in a fintech app, like that's actually that's hurting everybody.
yeah,
And so that's maybe answer two.
yeah.
And answer three is I have no idea what else I would be doing. And maybe that goes back to answer one, but I spent a lot of time with myself, with my friends, with my therapist, trying to discuss why kind of I decided Footprint. I don't know what else I'd be doing. It does. I like the challenges it presents, and I never would have guessed half the stuff going into it.
Yeah.
That's kind of that's what I'll end with answer. I'll end with the three
Yeah.
answers.
Yeah. What would make you happy? What do you consider to be success at Footprint?
Personally, like my goal with Footprint is like to do things that we've spoken about. Like I'd love if like Footprint through the data we have somehow can try to democratize things like detecting disease, or it can help women operate more safely despite new rulings. Like
Yeah.
those are things that I'm very passionate about. I care really deeply about everyone who works here who took a chance to work on us, and like I no longer view Footprint failing, whatever that means, is no longer failing me. It's failing to people who took a vote of confidence in me and what we were doing here. So going back to like what success means, it's a great question, and
Hmm.
I have no answer to it. I
Hmm.
tell people that there's one day where I'll be happy enough and the company will be big enough that like I'll take time off and like I'll walk away and like I could do, and everybody thinks I'm lying based off everything else I say.
Yeah.
That may be true. I think that it is something that we keep changing the line of. It's
Yeah.
something I kind of accept that. I think I was catching up with a good friend of mine, and I said I think entrepreneurs are some of the most self confident people in the world and the ones with the least amount of self love, because we do the crazy thing we said we were going to do, and then
Hmm.
we tell ourselves that we haven't done anything and we need
Terrible.
to
Yeah.
go do the next thing.
Yeah.
And I think if this is a talk about founders and starting a company, that is, I think, where you end up.
Yeah.
And I don't say that in glorifying it.
Yeah.
But I say that just being honest about how I often think about things.
Yeah. You said you worked in VC for a couple of years before you started the company. Um, how was that transition of being? I mean, my understanding is you worked at General Atlantic, large investment firm. I assume you were sort of low in the pecking order and just reporting to a lot of other people. And at least when you're an employee at that level, you don't have that much responsibility for other people. How was the transition of suddenly being responsible for multiple people, now 15 human beings, and their paychecks?
Yeah, it's real. I'd be lying if I said I was great at it. Um, I one thing I credit is that I had one real boss at GA. His name was Alex Crises, and I really love him dearly. We still text a lot, and he really taught me a lot about like people management and how
Hmm.
he treated me. Because
Yeah.
you're right, I could not have been lower on the pecking order. I tell a nice story in pitches. I went to GA, I helped lead a lot of our work around security, privacy, identity. Now let me say that's obviously laughable, but it's also kind of true because Alex would hire people and then he would trust them.
Yeah.
And it was, to me, it's the only experience I knew where like Alex hired me and he's like, you're really passionate and possibly smart about these things. Why don't you go do it and tell me what you think's interesting? And that's one thing that we brought here, which is bring on people and be like, Pedro, you're the best designer I've ever seen. You design the homepage as you think, and then we'll talk about it.
Yeah.
And that's one thing that I don't. It's feedback we always get in the positive column, which is like you give us a lot of autonomy. Part of that's me not being smart enough to know have an opinion on other things.
Yeah.
That's one thing. Alex would do even smaller things where he would uh, send people texts on Fridays, thanking them for the work they did that week, and it's something I try to do and customize. And
Yeah.
it's small things I think go a long way of just noticing that we're all humans. It's I don't think that there is a Bible of management principles. I mean, there probably are, and I'll read them. But I do think that a
Someday.
lot someday, yeah. I do think a lot of it though is just treating people with respect and treating them as humans. The other thing I'll say is uh, the Footprint up until July 9th, I'll be like the only non-engineer at the company.
Mm.
And that means that my co-founder Alex, a lot of the management really falls on him.
Yeah.
And like I say, management for me maybe is speeches at Monday and Friday, like company all hands, or we call them all feet, and kind of catching up with people. I think it's like a good note though if you're planning on starting a company, like I think that, and this is biased because I'm just projecting forward my own experience, but I think kind of a non-technical founder, like you will have more time to grow into that versus
Yeah.
I think it's much tougher kind of for like like the CTO, my co-founder Alex, like he had started a company. He then like was pretty senior at another company. Like he had managed people before,
Yeah.
and he does a really good job of it. And I benefit tremendously from it.
Yeah. And we got to wrap up. So I'll just end on this. What would your advice be to someone who is thinking about starting a company, is about to, but isn't sure of themselves?
If you want to do it, like you should totally go for it. Like if you have high conviction, if you've been spending a lot of time in a space, if you didn't just like go on GPT 2 weeks ago and decide to build an AI company, like I support you, and like that's great, and like get ready for a ride of a lifetime.
Yeah.
Um, and like I truly mean it. Like I think it's an incredibly rewarding and experience. But I think if it's I'm on the fence, there may be reasons for that, and like that doesn't mean you won't get there. But there's no rush. What I would say is like I feel like there's often like presented as like this rush of like to start something, and I
Yeah.
agree. Like like an investor, a prospective employer, like you don't want indecision.
Hmm.
At the same time, you have your most time before you've started it.
Yeah.
Like sure,
Yeah.
somebody could build the idea, but like everything looks competitive until you build the thing.
Yeah.
Like I think that like only more questions will be raised. So if
Yeah.
you think at the beginning there are like 3 open questions, please answer all 3, because that list is only going to grow.
That's awesome. Let's end it there. Eli is co-founder and CEO of Footprint, joining us from New York. Thank you, Eli. That was great.
Thanks for having me, Ed.
Scott, what do you think?
My sense is they're going to need to raise a lot of capital and try and sign up and create such a, not only not charge the consumer, but maybe even give them some sort of financial or compensation to acquire as many consumers as possible, and then basically buy business on the enterprise side. I mean, they're creating a marketplace for security, right? And the only way this marketplace works is if they have enough liquidity of people who sign up for it and enough companies using it such that there's value to the consumer. Because, I go to Hertz and I can just use my footprint to expedite the checkout process until there's enough places to accept it. I mean, Apple Pay didn't work for a bunch of years, but they spent so much money to get acceptance. They basically, my guess is, kind of bribed the enterprise and said, we'll take the lowest fees or whatever on it. He's going to have to raise a shit ton of capital. And if he gets to critical mass, my guess is one of the bigger players might buy him such that they don't have to ask consumers to do this twice. The pain point here is obvious. It strikes me that healthcare is the place you could have the most value, and it seems to me like this is a capital play. They've got to raise just a shit ton of capital to create liquidity, to basically buy the business for a few years and create liquidity on the consumer end and on the enterprise end. And the prize is big here if they can get enough people signed up such that Apple, Amazon, or Cigna or some hospital network decides they have to get into the space. They basically just acquire this company for the consumer set, and they might pay a big fee for it. And also, I just want to add, the reason I'm not a venture capitalist is I hate everything. I hate everything. Every business that's pitched to me, I'm like, that'll never work. So take it with a grain of salt.
Do you have any advice for Eli?
Raise a shit ton of capital. That's probably not that helpful. Go raise a shit ton of capital. That's not that actionable.
Oh, great.
I would say go really niche. Find an area where where the pain is really large for consumers. So I think there's a ton of innovation waiting to happen with shared information or what have you. Long way to going niche. I don't know if it's rental car companies, the specific crowds out the general. I'd find a specific industry and try and own this type of application in one very narrow part of the economy and then grow out from there. Thank you for watching this version of Prof G Markets. Check out our pod feed for office hours on Wednesday, and we'll be back with a fresh take on markets every Monday.